Today we are going to be looking at something a little bit different. That is because our Altcoin Buzz Alpha team has been making some sensational calls lately. Some in particular, really, they've been hitting out of the park. And look, we want to share that success with you. We want to tell you why. And so today's video is one of two in which we're really examining, really deep diving what we call the 5 main pillars of cryptocurrency investment. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. I wish you all the best of luck if you choose to invest genuinely. And that's all well and good. That may be the case, but you should remember that I'm not a financial or investment advisor professionally. And so that means that by extension, this video is not official financial or investment advice. So like I said, this is part 1 of 2 in terms of videos where we're examining those 5 main pillars of investment. And pillar number 1, broadly speaking, is kind of basic actually. We ask the question, where to invest? And so this is a pillar in which we're talking about coin selection. And while this is the most important of the pillars, really, there is a methodology here that must be followed because we cannot get great ROI without following the other pillars as well. And we have to begin with large cap holdings because the foundation of this number 1 pillar is in fact in large caps. I've said this many times before, and I'll say it again here, as much as I may sound like a broken record, but this advice never gets old. If you don't hold at least some BTC in your crypto portfolio, then you're doing it wrong. It's that simple. And to a certain extent, the general public is kind of down on it, arguably, but our alpha team still very much believes the same about Ethereum. The Ethereum story, yes, even though many are down on it right now, like I said, that story is especially true and even more relevant if DeFi grows again and the RWA sector hits the way that we think it will with time. So with that being said, I'm going to assume that you're at least somewhat invested in both BTC and ETH. Okay, now what? Now we look for high-performing coins in narratives that we like. Narratives are part of pillar number 5. We're going to get to that, why we invest, but that's coming up in another video. Some examples that we've been going very, very hard on in Altcoin Buzz Alpha, as well as here on the main channel, include Sui. They've just been crushing it in the last couple of months. Solana, which is one of the best altcoin performers this year across 2024. Mantle, and this is to play on ETH liquid staking in particular. BitTensor, to play on AI. And many, many more, of course. But a quick word now on spreading risk via market cap size. Large caps are important. Again, I'll double down on that, triple down, quadruple down, whatever. Hopefully you do hold them. I'm assuming you do. And they should be the foundation of your portfolio. Yes. But we can catch big moves if we diversify by market cap and also by quality mid caps and even the right small cap projects. That's because the further down you go in terms of market cap, yes, the higher the risk is, but that is commensurate with the reward. The higher the reward goes potentially as well. And that makes sense, right? If you think about Bitcoin, let's say a 10x on BTC takes us from $1.3 trillion, roughly speaking, to $13 trillion. Okay, but that is a lot. A 10x for Bitcoin represents a lot of capital, and that's hard to do, right, as a function of its size. And almost no one is predicting a 10x in this market cycle for Bitcoin. Eventually, yes, but a 10x at that size is just going to take longer. That's just the nature of it. On the other hand here, let's consider another project in the form of DYDX with a market cap of about 600 and let's call that $50 million. Or maybe Oasis Protocol at about $425 million. Both of these are much smaller than Bitcoin. They're still sizable, but they're a lot smaller than Bitcoin. And thus both have a better chance to 10x, all else being equal. That would take them up to $6.5 billion and $4.25 billion, respectively. That's a lot more realistic and requires a lot less capital inflow than $1.3 trillion to $13 trillion. And these are just 2 available examples here, DYDX and Oasis Protocol. But if they continue to run their projects well and catch the bull trend, then this absolutely could happen, that 10x. And the probability is higher than with Bitcoin, again, just due to its size, all else being equal. So large caps are important. The right mid caps are important. I would also argue that adding the right small caps strategically is the last step here. It's getting into a little bit riskier territory, but that's the thing, right? Like I said, that's commensurate with the potential. More risk, yes, but perhaps even more than 10x potential among the right small caps. The small caps, as I kind of define them, and I think colloquially as we do in the industry, are sub $100 million in terms of market cap. And two of the small cap gems on our list that you've seen us talking about here for a little while actually on the channel include Polytrade and GraphLink. Polytrade's coverage prediction markets for the US election have generated a ton of interest from the public. It's going to be fascinating to see if that continues after November or once the US election is settled. Is there more to it? Is this just kind of a one-trick pony, or is that interest going to remain with this platform? I guess we'll see. The current market cap of Polytrade is very modest, as you can see, about $11.5 million. And along the lines of that logic we discussed earlier, a 10x from here, that brings us to $115 million, still just barely over that small cap threshold, right? Relatively easy with the right inflow and influx of capital, especially if betting interest continues to grow after November. GraphLink's market cap is a little bit bigger, roughly twice the size at, let's call that $25 million. Again, a pretty good chance here to 10x. If we go from 25 million, that would bring us to $250 million. But I don't want to downplay the fact that, yes, there are more risks, and small caps are also more likely to go to zero as well. One big wrong move and all the market value can disappear. If you don't remember that happening or you weren't part of it, you can just ask anybody that held on to Luna, L-U-N-A, and that whole unfortunate episode. But that being said, that's why diversity plays a role, right? You need exposure to large caps, mid caps, but also leave some room for small caps. At least go for the ones that maybe we vet if you don't want to do your own research, although you always should. Make sure that you're looking at a quality project, one that has all its ducks lined up, so to speak, and at least give yourself some exposure to that opportunity of a more than 10x return on a quality small cap. And if you like this kind of stuff, if you're in need of more detail, we go into much greater detail, including the specific percentages that are right, given your risk appetite in our Altcoin Buzz Alpha group. So check that out. This Altcoin Buzz Spotlight video is sponsored by Rootstock. Do you know that the oldest and one of the biggest Bitcoin Layer 2 networks now has a DAO? It can now go fully decentralized and community-based. I'm talking about Rootstock and the Rootstock Collective, which is the first DAO to launch on Rootstock, the longest-running Bitcoin sidechain. It started all the way back in 2018, making Rootstock the oldest Bitcoin Layer 2 solution, bar none. And for years, people have been building out their Bitcoin ecosystem apps using RIF, or the Rootstock Infrastructure Framework, and its native RIF token. The new Rootstock Collective DAO means full decentralization, and all decisions will come from the community. It is a huge advance in Bitcoin L2 decentralization. And to celebrate, there are 3 new quests going on right now on Galaxy. Check them out today, and you can win part of $17,000 in prizes while also learning about the Rootstock Collective. For more information, click on the link that you can find in the description of this video below. So pillar number 1 concerned itself with where we ought to invest, which categories. Pillar number 2 concerns itself with what to invest. In other words, how much of our portfolio do we risk with each investment? This is an area where crypto often differs, actually, from traditional finance. A TradFi trader would tell you that the most popular risk management technique is to follow the 2% rule. If you're not familiar with it, that's where you never risk more than 2% of your total account on any one given trade. Now, this is for trading, but if you're holding long-term, the numbers are actually very different. Many of us across the industry use Bitcoin as our general savings to save and earn outside of fiat currency. And so, of course, a tool that represents our savings and investments is probably going to be way more than 2%. But if you trade actively, that's still a good rule to follow. There's just that discrepancy, right? There's that differentiation that we have to make. Whether we're holding long-term, holding and trading, just trading, it depends on where you fall in terms of that spectrum. Actually, in Altcoin Buzz Alpha, we recommend a mix. We recommend that you should at least have some of your account invested long-term. Projects that you expect are going to be around and making money at least a year or 2 from now. Let's call those the blue chips of the crypto space. But then you should also have at least some cash set aside for the great trading opportunities that may pop up. For example, we recommended Tau, TAO, aka BitTensor, in late August at $200. It's now trading at over $500. So that's a 2.5x in just 60 days. And of course, admittedly, not all of our trades are this good in that span of time, but we do have a very solid track record overall. And so it's the combination of that solid trading strategy and understanding your personalized risk as far as how much you may want to invest in each trade. You need both of those to keep you from busting your portfolio or round tripping like we see so many people do. Don't be one of those people. Be smart about it. Make a plan. Trade that plan and stick to it with discipline.